history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense, right? Basically what happens is the fair value of the network doubles. And in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. I think we double this time. So let's say 150, 160. And that would be by April, May of 25. Exactly. So by the end of this, now, I think it all depends. I've been saying that this is going to be the best Thanksgiving ever, right? And people are going to celebrate the crypto people in the family this year. And so if that FOMO period is like the previous two, where from November to December, go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks.
This current crypto bull market will be unlike anything we've ever seen before. We're going to see Bitcoin's price surge to anywhere between $150,000 and $160,000 per coin, and we're going to see Ethereum hit $8,000 per ETH before the end of the year. This is the latest prediction out from Mark Yusko, CEO of Morgan Creek Capital Management. With the recent halving event reducing Bitcoin's issuance of new coins by 50%, Yusko expects a major supply shock to play out that will skyrocket Bitcoin's price to new all-time highs. This, combined with the growing institutional demand, will create a huge supply-demand imbalance, forcing Bitcoin in one direction. Make sure to stick around to the end of the video as Mark Yusko breaks down exactly how he sees this cycle playing out. But before that, today's video is brought to you by Crypto.com. If you still haven't got a crypto card yet, you're living in the past. With traditional cards, you have to pay annual fees, they take percentages, and some banks charge you at every transaction. That's not the case with the Crypto.com Visa card. With a Crypto.com Visa card, you can spend your crypto anywhere you want, and the benefits are insane. With your Crypto.com Visa card, you can earn up to 5% back in Crow rewards on every transaction, enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for the first 6 months, get complimentary access to airport lounges and elevate your travel experience, and flaunt your style with the sleek and stylish metal card. Now, Crypto.com is currently giving out a $25 new user sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. First off, download the Crypto.com app by clicking the first link in the description or scanning the QR code on screen now. Second, sign up using our referral code nutty for your instant $25 bonus. Thirdly, once you've signed up and have been approved, here's how to get your Crypto.com card. Tap the card tab at the right of the navigation panel, select your preferred card tier based on the required cardholder Crow staking or lockup amount. I personally have a Ruby Red card. The only requirement is you lock up 400 USD of Crow for 180 days, which is then unlocked. Then accept terms and conditions. And you'll have to have sufficient Crow in your crypto wallet for the 180-day stake or lockup. Finally, submit your delivery address. Then you'll get your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. So to claim your $25 bonus and earn up to 5% back on all your spending, click that first link in the description to get started with Crypto.com today. Now, back to the video.
There are multiple factors in markets, and the biggest one really is supply and demand, basic econ 101. And we had a pretty significant demand shift, and it hasn't fully played out. In fact, it hasn't even come close to fully playing out. The math that always amazes me, I believe in the next 12 months-ish, so we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. There's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. That's actually more money than has ever converted to Bitcoin in 15 years. Yeah. That's a pretty amazing thing, because what people forget is that multiplier effect of the bid ask, right? I convert some fiat into Bitcoin, but then I don't want to sell it. So someone's got to bid a higher price to get me to sell. And so you get that multiplier. Now, I don't think the multiplier is whatever Bank of America says, 118. Yeah, when we were talking pennies or dollars or $10 or $20, the multiplier was really, really big. Today, I'm going to say the multiplier's probably more like 20-ish. So 300 billion would add 6 trillion of market cap. And this idea that number go up, that's not the point. The point is the utility is going to continue to go up. The embracing of the technology is going to continue to go up. And at the end of the day, it is a finite asset. People say, well, that Satoshi could show up and add more. No, Jameson Lopp showed us the lines of code that prohibit that. And the thing is, fine, could 51% of the participants change that? Sure. But the likelihood of that happening is really low. And the reason behind it, why it might happen, could be really interesting. So it's kind of like a stock split. But all of that aside, the demand for blockchain technology, of which Bitcoin is a blockchain. I love this whole debate, right? Bitcoin, not blockchain, blockchain, not Bitcoin.
Yeah, of course.
Like they're the same thing, right? We have the Bitcoin network, that is a blockchain network, and the Bitcoin token, which secures the network through block rewards. I don't know why we debate this. Just makes no sense.
IMF says Bitcoin has become necessary financial tool for preserving wealth and financial instability. They wrote an entire report. You guys can check it out. It's a very, very long PDF.
It's probably a fad, right? That one of the largest, global lenders that is acknowledging that, there's this new technology and it kind of threatens our hegemonic control of, look, if you want to impoverish a nation and control it, you lend them a bunch of money that they can't pay back, and then you seize their asset. And it's worked really, really well. And it works really, really well because the dollar has been this hegemonic currency, but that's now under threat. And threat has a negative connotation. It's evolving. And the reality is the dollar has not been the global reserve currency for the entirety of the world's existence. It just hasn't. In fact, it's only been the hegemonic currency for a very short period of time, about 80 years. And okay, yes, all of us who are living right now, that's our life cycle. But the reality is history is replete with examples of other countries, Portugal, Spain, Netherlands, UK, having the upper hand, and they use the same process. Look, I think it's interesting. So if you lend money to people, individuals, it's a good business, right? The Medicis kind of invented it. They stole it from the Portuguese monks. And, the nice thing is you can influence people to pay you back if they don't pay back, right? But it's not really that profitable relative to if the person defaults, what do you get? You kind of get their stuff, and that stuff's not that valuable. So then you can lend to corporations. And if the corporation defaults, you can get the company. And some companies are actually worth a lot of money. Well, the Rothschild clan figured out, if we lend to governments, now we're talking. Because when the governments default, we get power, and power creates massive wealth. And so lending to governments has been how you control things for centuries. And, the fact is, if I want to send money to, I say, my mythical, mother-in-law in El Salvador, who happens to be here in Chapel Hill, she just came from Tulsa to visit, but if she were in El Salvador and I wanted to send her money, I would send $1, and Western Union and the Bank of International Settlements and a whole bunch of other people would take their cut, and she'd get 70 pesos. Think about that, a 30% slippage. if I used the Strike app and sent her across the Bitcoin blockchain, she'd get 100 pesos. That's better than 70. And, I shameless shill, right? So I am getting involved with this group over in Japan. We want to create the, MicroStrategy of Japan, this little company called MetaPlanet. And I needed to fund my investment. So I called UBS and said, I'd like to send this money over to Tokyo. And they say, oh yeah, that'll take 2 days. What do you mean it'll take 2 days? I need it there this morning. They're like, no, 2 days. Because we got to convert the current. I'm like, you push a button. But no. I said, well, then just give me the money and I'll send it with a stable coin. Like, oh, no, you can only withdraw 25,000 a day. I mean, speed and low cost are really, really important. I mean, I've had this debate with people recently, the fact that the Solana network crashes all the time and it gets overloaded and transactions fail. Yeah, that's a problem. But the reality is when it works and I can send USDC instantaneously for fractions of a penny anywhere in the world, that's better. And someone asked a question I thought was interesting, said, if Ethereum didn't exist and it was invented today, would anybody use it? That's interesting, right? Because it is slower and more expensive than Solana and others. So why would you go that way? Well, the reality is it wasn't invented second, it was invented first and has a larger installed base of developers. So it's not the best technology that wins, it's the technology that gets critical mass first. That's how winning wins. This is huge. This is huge. And that's why, I went down the runes rabbit hole and the ordinals rabbit hole, and I set up a node, and I wasn't very successful. Nice. I couldn't do the command line very well, but I did. I went total degen, and but I just I kind of worship at the feet of the real degens like Trevor and Casey and those guys, but because they're brilliant and they can code. I can't code, but the bottom line is why did I care about this stuff? Well, because you and I've talked about this. I keep going back between are we going to look like Web 1, Web 2 with a protocol stack? Or we're going to have all these L1s and then you got a bridge. L7s. And the bridges are really crappy, except the Chainlink guys go, no, we're great. And we've solved it. And I'm like, okay, I'll take your word for it. And then you got the algo people and there's all kinds of people saying they've solved this. But the reality is, I keep kind of coming back to the Lord of the Rings, one chain to rule all chains, which is proof of work is better than all the others. It just is. It's more secure. And if I'm going to have an asset that I want, I'd rather have it on chain than a pointer to an AWS server. So if you think about what ordinals and inscriptions and runes do, that they're superior, I think, to traditional NFTs. So we're starting to get to the point where you could have L2s and L3s on Bitcoin, and we really do have one chain to rule all chains, but it'll take a while because there are other things out there. That's how technology evolves, right? People forget, right? There are 5 protocols, and really the one we're using right now, TCP/IP, is the one that most of us use all day, right? You got SMTP and HTTPS, and we use those too. But at the end of the day, there's only 5. There were 80 in the 60s and 70s and 80s, and no one was sure which ones were going to survive, and people made bets on, but we ended up with 5. And the same thing's going to happen now, right? There's going to be a lot of experimentation and a lot of innovation and some scams, but there's always scams. There's scams in every technological evolution. Part of the reason is, where does technology start? It starts on the fringe, right? It doesn't start at the center, because the center is ruled by the incumbents, and the incumbents don't like the people on the fringe, and so they keep them out there.
So there's Mark Yusko with his bullish insights on Bitcoin for this cycle. Yusko discusses the historical trend of Bitcoin, noting the exponential price peaks that followed after each halving. He explains how halvings reduce miner rewards, potentially causing some miners to exit if prices don't rise. This is why Bitcoin's price is practically designed to always rise after each halving. Yusko speculates that whilst the fair value of Bitcoin may not double as before, it could still experience a huge surge, potentially hitting $150,000 to $160,000 by 2025. He also mentions the influence of FOMO and leverage on price movements, expressing optimism about Bitcoin's performance in the future. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 60,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.